And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Limit Up Podcast. I am Dan Hodgson, sitting down with, as usual, Jack Belzer. Jack, how are you?
I am doing fantastic, thank you. I am definitely behind schedule here. I was in a previous meeting, so I'm frantically going around, hitting record in various areas, trying to figure out my notes for today. But besides that, I'm doing great. How you been, Dan?
Not too bad. Ready for the weekend. We got a quiet day tomorrow. Markets are closed. Things are quieting up as we head into a little bit of a long weekend here, which I'm looking forward to. And I'll tell you what, Jack, really quick, I'll go run through what happened here in the markets today, let you continue getting settled in. First and foremost, let's start out with crude oil. It's kind of been the talk for quite a while. Everyone's paying a close attention to that one as we are paying more at the pumps. We saw CPI recently, an uptick in oil year over year. Well, that's not really stopping. Big move today. Market opened up a low settlement price near the overnight low and really rallied from 102, approximately $102 a share, or a contract, all the way up to 107. Peeled off a little bit here today, but a nice $5 move there. Then you got equities. Jack, we were just talking about this a minute ago. Opened up this morning. They started to sell and really have not slowed down whatsoever. I think there's a lot leaning into that one.
Yeah, it's the same old story from last week. You'll notice the 10-year rate is up a decent amount today. And as the 10-year rate goes up, stocks will all go down. But most of all, our friend, the NASDAQ, will lead the way. So that's how we're seeing right now. Small caps down 1%, S&P down 1.3%, NASDAQ down that big 2.4. With the big raises comes the big falls. Rate sensitivity.
Jack, you bring up something interesting here too, right? Rates are up, stocks are down. Well, when rates go up, what is the other factor? What is the other main market that we start to see sell off?
Bonds.
Your favorite.
Yeah. Bonds.
The bonds and notes start to sell. So when you get these rates increasing, you're going to see bonds start to look lower, which we saw here in the 10-year note on the same page with the equities. Big sell-off here today.
Oh, yeah. Yeah. I mean, there's still that yawning gap we talk about between the CPI came out. We didn't get to talk about that because that happened. I think that happened after we recorded last week. But CPI came out at 8.4% or something, a 40-year high. Still a huge gap there between 8.4% and 2.8 about, which is where we're at now. You'll notice a couple of weeks ago, I said we really got to watch out for that big round number, that 3%. 3% to 3.2%. I think that's when stuff's going to get real, as they say. So keep an eye on that.
As we talk about real stuff here, Jack, I think one of the most important things when markets start getting a little wild, a little crazy, we got to keep ourselves grounded. Jack, what do we usually talk about when it comes to keeping ourselves grounded, paying attention to what's going on, and protecting ourselves to be consistent in our trading?
Yeah, well, that's kind of the topic of today. We were talking about journaling, but we're going to talk about objective journaling more today because there's two types of ways that you trade. So Dan, are you finished talking about today's market? Shall we launch into this, or do you got a little more?
Let's launch in.
All right. There's two ways. Well, first off, everyone knows out there that if you're a successful trader, it has to be based on data. It has to be based on what objective things you have observed in the past, right? That's called research. And there's two main parts of research, okay? The hard data and sort of your emotional feelings about it. Both of them are important and they can both go in your journal. Good traders journal for that reason. You need to have a record of the past so that you can go forward and not make those mistakes again or find out what works. Now, many of you are probably familiar with the more, I'll say, subjective trading journal, where you write down that you took a trade and sort of what you were feeling at the time, why you were doing it, sort of like a diary, the type you would keep locked away under your bed. You don't want anyone reading that journal, right? There's another type that I think a lot of people that we see aren't keeping, which is a super objective, data-driven one, where you have, say, an Excel sheet that you have all sorts of variables, and then you can put histograms of your trade by the day they happened, everything else. And I thought we were going to talk a little bit about that today, because I saw an article written by, I guess he goes by O Captain on TradingView, that I thought was a real succinct way of describing these objective journals. And Dan and I have both watched it. So I'll stop talking for a second and let you say your thoughts on, Dan, what do you keep as far as hard data on your trades?
Jack, I know there's a lot of talk about that emotional state. I think that's a phenomenal thing for newer traders getting into this. We got to kind of learn about ourselves, learn our emotions. But when you're starting to get into the thick of it and you've been around for a little while, you have an understanding of those emotions. I don't think that's the best journaling for me. I will say at the end of any trading day, I look back throughout my day. How was I feeling? I sit down in the morning, I think through those things. But throughout my regular session of the day, I'm pretty just focused on what my trading is going to be. So to me, for my journaling, the detailed oriented stuff I'm doing is I'm looking at my trades. I'm laying each one out. What was the setup? What was the system? I kind of look at it in a couple different parts. Where was it when I saw the trade? What were the outline? What were the factors that made me look for this trade? The next thing I'm looking at, what's this market state? How is this market setting up? If this is coming into an area that I like a trade, are we range bound? Are we trending? Are we in a channel? Are we breaking out? What's going on there? I need to understand that. And I got to ask myself the follow-up thing. And these are the three things that I usually do when it comes to journaling throughout my day. The last one here is strictly I'm looking, where could my entry be and what's my risk versus reward in that trade? Mm-hmm. Those are my hard points that I really pay attention to. Obviously, there's a lot more that goes into it. Outcomes of trades, how long you're in them. I mean, you can go on for days, but it really comes down to, for me, those three things. And I'll run through that again. I even have them written down, but it's find that signal. So number one, we're looking for what is that signal? Where is the signal? I found my signal. Okay, number two, what is my market state? Does this signal work inside this market state, right? If I'm approaching a resistance, a prior area of resistance, okay? If I'm in a range-bound trade, okay, I'm looking to short that thing because I want to see that market start to rotate back inside. Now, if I'm trending higher and I'm seeing this market make new highs and we're at a previous resistance area, I'm going to be a little bit more hesitant and say, hey, I'm not looking for this market to change directions. I'm a little too far away. I got to find this thing pulling back a little bit. And then lastly, that third one, I'll say one last time, find that entry and determine my risk, whether I'm going to get in. And when I say determine that risk, I'm determining my profit target versus my risk.
That was a succinct list there, Dan. Thank you very much. Yeah, I would be willing to bet that I don't have this data, but I would be willing to bet my life on it. When we look at the Top Step environment and the traders as a whole, a small percent consistently journal every day. And I think that an even smaller percent are back testing. And so I'm going to transition into sort of the objective side of why adhering to your strategies and then recording them in a consistent way is going to make you a much more successful trader. So the guy that I saw do it, he just kept track of the asset he was trading, the date, the time in, the time out, the direction, and how much money was on it. Okay. And using that information, you can come up with an incredible amount of strategic insights, but only if you're consistent, because this was the part that I liked. And I think that I can display this now. All right. This particular trader wagered the same amount on every trade. It was 1% of his account. And this is something I wish more retail traders would do out there. All right. 1%, and every trade was looking for a 3-to-1 risk reward, where he would either lose 1% or make 3%. All right. And that's how you grow an account exponentially. And it's also how you limit your losses when we get into capital preservation. And that number changes. So if you go down money, your 1% that you're wagering is going down. If you're up money, all right, if you keep building that account, that is a sustainable way to grow your account. I think way too many people out there are just looking in pure dollars things and willy-nilly betting 20% of their account on one trade. You can't do that and be sustainable. And if you find something that's 2-to-1, 3-to-1 that works even 40% of the time, you're going to grow that account. And you can only see if your strategy is working, though, if you stick to that and don't bail on trades early, don't move your stops around for no reason whatsoever, and especially don't let move your stops back. That's probably the worst thing that I see beginner traders doing is you have your stop level, you set it there for a reason, it gets close to it, and then you move it back. Why would you do that?
I don't know, Jack. I want to clarify one thing you said, or kind of add on to something you said here. You're talking this 1 to 3%. I think that's a phenomenal thing to think about whenever you're trading. The one thing I can't stress enough to any trader out there is just because you see a trade doesn't mean you automatically set that stop to 1 and that reward to 3. You have to recognize I can only get into this trade if it falls into an area that the risk that I'm willing to take on the trade, that stop is at a point of invalidation, right? So I think that's where so many traders, that's where the consistency part goes out the window, is because they said, I'm consistent to my execution, but you're not consistent to the plan. If the plan says your risk is 1%, or let's just say $100, you need to enter into that trade where if it goes 100 against, you're starting to look at that trade's no longer valid. Not valid in the sense of you got stopped out, but valid in the sense of you're probably not going to take that long at that point. And so that's really what you need to be thinking about to help create that consistency.
Right. And I think the most important part is if you don't follow through with your plan, and there will be some baby noises here. We are at a state of constant flux here at the Pelzer household. That is the work from home environment. I think that you also invalidate any insights. If you don't follow your plan, if you're recording all this, it still doesn't help if you're changing the plan around. You'll never have an idea of whether your strategy works if you keep on entering at it, but then just kind of getting in or out of it wherever it feels right. You got to have, should be like a flow chart, your strategy, right? And over time, if you keep on following that flow chart, you will learn one way or another if that strategy works or if it doesn't, in a scientific way. If you just start shooting from the hip, you're just kind of treading water, and that's not a great place to be.
Exactly. As you want to develop as a trader, it's this consistency is so important. Like Jack just said, if you're shooting from the hip, you're not going to figure it out. But if you're shooting from that same location at the same thing every single time, you're going to be able to start to hone things in. You tighten the area just a little bit, and as you tighten things up, and it's very incremental, minute changes, just a little bit, little tweak. What do I need to find here? And what I would say too, when you're in this back testing area, at the end of the day, go back and look at the trades. The ones that did not go in your favor, look at what it would have taken for that trade to work. Annotate that stuff. This is where, to me, journaling is super important, is because you can look back, you can see exactly what you did, at what times, what you were looking at. You know what that trade turned out to be, what would it have taken to be a profitable trade, the trade that you could have made money in. When you start to see those things, this is where a lot of times I see a lot of traders, if they're getting in here and trading and they're keeping their stops relatively tight and they're taking a lot of trades because those stops are super tight. But then if you start to look at it, they have great direction, they have good entries, their stops are just a little tight. And if you open up that stop a little bit, you find a better opportunity, and you can sit there and go, okay, instead of taking 30 trades in a day, I can take 5. And those 5 are going to be more profitable than most of the days that I take 30.
Yeah. If you stay true to your strategy and record it even if you're losing, you learn something, because like you said there, if you're noticing that you run your strategy and you keep on a surprising amount of time get stopped out by a little bit, then it works. Well, you've learned something. Like you said, that means you got to wide it out. The other, I'll say that the other side of that coin is true, but it's rare. I feel like it's. I was watching like a golf instructional video the other day. Some teacher who said he's probably seen 1,000 golfers swings, and it's like only 3 of them or something like that had too much shaft lean or whatever. Everybody has the same problem. I would say among retail traders, the stops and targets are overwhelmingly way too tight. But theoretically, if you looked and said like, wow, my strategy is working, but I'm never getting in because I'm never getting hit at these spots, well, then you can tighten it up. And that'll change based on the volatility of the product you're trading. So everything's always out there to be adjusted.
Yeah, Jack, we got a question came in from Nicholas.
Sure.
I like this. I think it's a good question. How do you decide when to allow that 3% to run to a higher percentage, which would be abandoning the plan?
You don't, with caveats. If you want to see consistently if something works, right, it's almost like a new trade at that point. I'm a believer with something like this, if you're trading outrights, that if what you're looking for is 3-1 and you've built a strategy like that, then you should just take that as the 3 winner there and be done with it. That's a good risk reward. I mean, I suppose if you at that point say it went there and there was still some other part of your strategy that was saying that, oh, this still looks good, then fine. Maybe treat it as a new trade. What do you think on that, Dan?
Yeah, I think, number one, Nicholas, good question. If you're going to let that run, that needs to be part of the plan, right? Like that has to be part of the plan. But what Jack's talking about here is this idea of back testing and working through a system and really honing in and developing a good system. When you're doing that, you don't want to change. You don't want to deviate because you want to determine the success of that strategy, because not every trade you're going to take or every day that you're trading, you're going to find that runner. You want to see, can I hit that 3% marker? Can I hit that profit target consistently to be a profitable trader? When you start getting into your trading and you're starting to really hone in on that strategy, that's when you can have a plan of how you trail stops. And then when I say trailing stops, you can do it a little bit differently. We have a ton of content on that out there, so I'm not going to get too deep into it. But it's an art form, and it's something you'll have to start to work on. But really, when you're looking at this and you're developing your strategy and you're working through this journaling like this, stick to the plan. Yeah. It's not about how much money I can make, but can I make money consistently?
I think I have a more insightful answer to his question now. All right. If your strategy is to go for the 3-1, then take the 3-1. But these aren't the only strategies. If the strategy is that you're looking for a trend or something like that, then your strategy should involve, like Dan said, how you're trailing your stops. Are you using time stops? Are you using some sort of volatility stop or some sort of invalidation? That's fine. Then let it run. Just make sure that you're consistent in what you're doing, not just kind of, moving stops around for the hell of it. Just the same way that we talked earlier about just kind of bailing on trades or stuff. That's a form of it. Just moving your stop without a strategy behind it is the same phenomenon, I would say.
I would agree. I think if you just say, hey, this market's running, I'm going to peel my profit target off and just let it go, and you really don't have a plan of how you're going to trail it or where that next stop out is or where you're going to take it to, let's just say with that 3-1, lock it in, profitable, successful, good trade. Because at the end of the day, we can sit here and play this game of, well, the market kept going. I was long here. If I would have stayed in, I could have made this much. Well, that was not part of the plan. The plan said you're looking for 3-1. You got your 3-1. That was a success.
Yeah.
When you start looking for runners all the time, it's going to be very difficult to create consistency.
Yeah, but you could still build a sheet for that, right? So it's the same idea that, say you're risking 1% of your account again, It's just instead of having a set reward to risk ratio, you have a set strategy for getting out, right? So what that might look like is you lose 1%, you lose 1%, you lose 1%, you make 10%, you make or 12% or something like that. And you can still evaluate the same way. You can figure out what your expected value is in the trade, but it comes down to just having a reason, not just letting run and just kind of sitting around and hodling. I think that's the word. Dan, did I tell you this? I meant to send this to the Slack, and I can't believe I haven't yet. I was at my parents' place out by Elmwood Park, and there's a Chinese restaurant I've been going to for my entire life. Fantastic food. I'll give the pump to Lotus in, I guess it's technically a Chicago address. Great Chinese food. The fortune cookies came. And my dad opens up the fortune cookie because, my dad's the dad joke guy. So he always likes to, add the, in bed or whatever at the end of it. But he's staring at it and he's trying to read it. And he's like having trouble reading it. And I'm like, what's going on here? And I look at it and it says something about hodling. I'm like, what is going on? And I flipped it over and it was FTX, the crypto exchange. And all the fortune cookies, I kid you not, were sponsored by FTX, and each of the fortunes were about crypto. That's one of the wildest, craziest marketing things I've ever seen.
That is some real down home guerrilla marketing right there. Just stick it in the fortune cookie, and we'll get people to buy.
Yeah, what can we do? We should put like Top Step in the I don't know, like the center of a magic 8 ball or something. I have no idea. But man, that upset me somehow. I just needed to say that there because I don't know.
I was wondering where we were going with this Chinese food in Elmwood Park.
That's where most of my stories end, to be honest, but good place. So to get back on track there, I would just encourage everybody there's plenty of templates out there online where you can build your own, or Top Step might be coming out with one in a few weeks, wink, wink. But definitely give it a try of just trying to consistently record each of your trades, because there's a lot more than just looking at your overall risk reward and average winning and average losing trade.
There's so much to it. And, I think Jack kind of alluded to it a little bit. There's a ton of different trade plans you can kind of put together. So when I have my 3 little bullet points, there's a lot more caveats that go into it, right? Like, Nicholas's question, at what point do I allow my trade to run? Well, we're looking for consistent things, right? Were we in a range trade and it broke out? It broke out of that range and I was able to maintain direction with it and hold that trade. Okay, that's a reason to look for holding onto that trade. So you can have a lot more caveats. I think we kind of hit the high level here, but there's a lot more you can put into these. I mean, if you were to go find any one of us and you ask us about our trade plan, I mean, it would be pages, and there's so many different things that we've developed over the years. Everyone's the same, but when it comes to back testing, you're trying to figure out something new. Keep it very simple. As they say, KISS, keep it simple, stupid. I swear by that. I think if you keep trading in general, everything you do in it to a simplistic manner, you're going to have a lot more fun. You're going to be a little bit more comfortable doing it. And as we say in the Marine Corps, we break it down Barney style, break it down by the numbers, keep things super simple so that it doesn't get overwhelming. When you start adding tons of stuff into it and you don't even understand the language that you're writing in, it's probably a little too much. Reel it in a little bit.
Yeah, there's an opportunity for breakdown. There's also something in like data and mathematics, the idea of you might be like overfitting. If you're back testing and including 17 variables you're looking at, you're essentially just molding everything to the data and not really gaining anything that's works for the future, right? I won't go too far down that rabbit hole because it'll be boring as hell. You know what's not boring as hell, Dan? We can finish off here.
Make Hogue money.
Make Hogue money. Well, I'll give that the plug right now. Check out Tuesday and Thursday morning at 8:25 on the YouTube channel. No, it's not on the YouTube channel. It's in the Zoom. So how can we get them the Zoom link, Dan?
You're asking probably the wrong guy. I know there's a link out there that you can click on to register. I'd imagine if you can't find it, you can email support@topstep.com or look
Yeah,
at our Facebook community.
Yeah, email support@topstep.com or the Facebook community. They will make Hogue Money. That's where we take live trades with John Hoagland, which people are into. We're going to do a lot more live trading. I think, Dan, we might even turn this into a little Top Step Power Hour at some point and trade at the end of the day. It could be fun. But the fun I was referring to is, last week we said that Elon Musk was up to 9.2% of Tesla. Now he wants to buy the entirety of Twitter and take it private. What's going on here?
Well, like I think we said last week, when you have $300 billion, you want to spend it somehow. He wants to buy Twitter. I find it interesting. I'll tell you what I like about the whole situation, and I'm not saying I'm for or against him buying Twitter. I want to be clear on that. I don't want to talk about that part. We got Mako's money in the chat. Someone just dropped the link from Top Step.
Thank you. You are a saint.
Thank you. But I will say this: like when I look at what he's doing, it's like if I had $300 billion, I just wanted to go start spending money. Those are things I would do. Like, Twitter, that's an interesting company. Well,
I guess
I'm doing the value. I'll pay $43 billion, which pays out every share $54 a share. It's trading 46 a share. Perfect. I'll pay a premium for it. I'll buy Twitter. Like, so I get, like, I look at it as like, if I had this kind of money, I would be doing stupid stuff like that too.
Yeah, but I mean, there's so many more fun, less stupid things you could do. With $40 billion, you could probably buy every team in the NFL. You could, start.
He's a tech guy. He's not a sport guy.
But that's what's so weird about it. It's just that the guy needs more hobbies. He just loves Twitter, it seems. And remember, even though he's the richest guy on earth, he's worth, like, I don't know, at price of Tesla, $280 billion. Buying Twitter for $40 billion, he's got to finance that or something. He can't just, what was he going to sell? After taxes, he has to sell $60 billion worth of Tesla stock. I mean, the investors aren't going to be fond of that.
I'm curious how much cash he's got.
Not a lot. That's why he sold. That's why he had to sell all that Tesla stock a while ago. It's because he had those options exercise, right?
Mm-hmm.
And he needed to pay the taxes on them, which I think was like
$11
billion, right?
Mm-hmm.
So he would need to either find financing, which I do not know who in God's green earth is going to finance this, because it's not like he's not buying this to, like, make money for the shareholders. He's buying it to, I don't know.
All I look at it is it's a dramatic, fun story to follow. I don't use Twitter. I could give two craps about Twitter. I have one. I've never actually. I think I've tweeted 4 times in my whole life. I haven't scrolled through it. I haven't scrolled through it in forever. So, to me, I just think it's comical. I think it is just a comical story that's happening. And I love the content that comes from Elon Musk over the last few years. Truly enjoyed watching everything. I watched that Joe Rogan podcast with him where he's coughing as he's smoking, and he has kept me entertained the last few years.
He is something else. So yeah, I guess that's where we could leave it for today. So do your journals, and maybe one day you can be like Elon Musk and buy, I don't know, Snapchat or something like that.
That'd be an interesting one if he tried to buy that. I'd be curious if that's next on his list.
It would at least make sense that there's more. I mean, I don't know. It's wild. I can't wrap my head around this. It makes my
I don't
brain
think
hurt.
anyone can other than him, and he's not even vocalizing it too much.
What are the odds it happens? I don't think.
I think it's very slim. I don't think it will. But I think he's going to continue. Well, because he turned down the board seat because he wanted to continue buying more. So we'll see what happens. I guess we'll make this our weekly drama corner. Does Elon Musk have more Tesla or Twitter?
I like that. Yeah, the Elon Musk corner. So that's all I got for today. Journal, Keep your data, stay safe out there. Namaste. Trade well.